War in the Middle East is back, declared by the Prime Minister of Israel, Benjamin Netanyahu, following an attack by Hamas. This development is both shocking and unsurprising. It's shocking because it's the reality of a nightmare that a lot of people share. It's an all-out war in the Middle East. It's unsurprising in the context that this part of the world has been in conflict for a millennia. Violence in pursuit of their arms and to settle scores that in many cases go back thousands of years. We've seen similar situations in the past, like Russia's invasion of Ukraine, which raised questions about how the financial markets would react. In the case of the Middle East conflict, there is concern about the possibility of a regional escalation and even the involvement of external factors. Keyword: external factors. If a country like Iran were to enter the war in any capacity, it would completely destroy the markets, especially the oil one. That is because Iran is one of the major players in the oil industry. They are a part of the OPEC club and they have a lot of power. Following that possibility, the chairman of the U.S. Joint Chief of Staff, General Charles Brown, warned Iran to not get involved in the conflict. So obviously, the United States also understands the implications of it if Iran were to enter the war. Not just Iran. This is happening in the Middle East, so it's surrounded by countries that are producing oil. Jordan, Lebanon. These are countries that if they were to be involved in the war, they would have a lot of impact. Now let's talk about the likely outcome of the war and how it's going to impact the market, the question that you're here for. So history has actually shown us that financial markets tend to recover relatively quickly from such geopolitical events. Take the example of a Russia-Ukraine conflict. Despite initial stock market declines, the market had no trouble bouncing back. Driven by other factors such as the economic recovery from the pandemic, it's crucial to understand that while these conflicts are tragic on a humanitarian level, they may not have a significant impact on the economic front. These regional conflicts, like the one in Ukraine, often stay contained within their respective regions. This is a departure from the past when Middle East conflicts could significantly impact global oil markets. Nowadays, the energy landscape has shifted. With the alternative fuels and the domestic fuel production within the United States, it's really reduced its dependence on Middle Eastern oil. So while Israel's declaration of war is undoubtedly concerning, it's unlikely to be a primary driver of the market movements in the next year or so. Investors are actually more likely to shift back their attention to the Fed and the interest rates and the unemployment numbers. Those are still the things that are going to drive the market rather than the news that we're seeing abroad. The conflict may cause some short-term volatility in the markets, and it already did, but that should definitely not be your sole reason to panic and sell the stocks. Needless to say, however, I suggest that you keep a close eye on how the situation unfolds. But from an economic perspective, the Israel and Hamas war is not going to have a major impact on the markets. And there's your answer that you were looking for. If you liked the video and you got any sort of value out of it, comment down below, subscribe, and ring the notification bell. It helps me a lot and it helps the channel grow. Thanks a lot.